Okay, so I just want to recap what happened in the gold market in the 25th of January. This is going to be a brief recap. So, the market um, started at a downtrend. Um, the bears were dominating the market, so the market was falling, and eventually the news came out about the MBA purchase index, which turned out to be better than expected, better than the previous period. Now, what is the MBA purchase index? Well, so this is a Mortgage Bankers Association of America. The purchase index includes all mortgages applications for the purpose of single family home. It covers the entire market, both conventional and government loans and all products. The purchase index has proven to be a reliable indicator of impending home sales. Um, yeah, essentially, because the actual number was higher, that means that there was a lot more activity in terms of there was a lot more activity in the real estate market, um, which is obviously good news for the economy. If there is no higher activity, no, that's good. So therefore, um, there's nothing to be concerned about, and thus the gold price fell. Afterwards, so because there was nothing to be fearful about, the gold prices just fell once again, and then it sharply went back up to 1932, around that area, around that price range. And the news came out about the crude oil inventories. So I talked about this um, economic news in my previous video, but essentially it boils down to, um, if the actual figure is lower than the forecasted figure, that is bad news for gold, and so the price went down, as we can see just after this news. It simply means that um, there was a lot more oil used than forecasted. But anyways, I talked about this indicator in my last video. Um, so after this slight dip, the price of gold once again started to go up, and this was because of these big news regarding uh, U.S. stocks, especially big ones like Microsoft and Boeing. They all had lackluster reports, and obviously, since gold and stocks have a negative relationship, because stocks fell, gold price went up. So there was some kind of market turbulence, and this again started to drive the price of gold up. A lot more uh, capital flew in the market, a lot more demand for safety. And lastly, the last news was about the 5-year note auction. Um, as we can see, like the yield on the 5-year bill, it decreased almost from 4% to 3.5%. So that indicates that the debt situation in the US has worsened, and because of that, that obviously is a bad sign for the economy, and anything that is a bad sign for the economy is good for gold. And so gold price started to go up once again as investors obviously realized that things are not going well economically. Um, and yeah,